Awesome.
But I'm late.
Okay. I'm gonna send you a request to record. Better late than never, right?
Yes, better late than never. And I believe we. Oh,
All
I'm
right.
watching this on a delay. This is super distracting.
Yeah,
I
I
need
think it's
to.
like 30 seconds or so.
So I need to like mute this, right?
Yeah, you gotta mute it and then there it is. Okay, I have it open muted. Okay. So I'm gonna post
Yeah.
it on the Instagram as well. But this is the May 22nd live stream, our third edition, and the market is in a very interesting place and we have a lot to discuss.
Yeah, I'm gonna post this on Twitter as well. Now that I have it muted and it's far less distracting. I can't even look at that screen. I'm like looking at our faces talk now. All right. Live on the Prospero channel.
Yay, we made it onto Prospero. Big win.
Yeah, for those that are finally making it a link for our newsletter, thanks for being patient. Uh, we had everything set up last week, but the issue was that I had a 24-hour probationary period or something like that I had everything ready, and then the first time I tried, they make you wait 24 hours, which is not something that you'd expect. Um, but we're here now. Should we dive in?
Yes, let's begin. Where do you want to begin exactly, George, this week?
So I think what's happening in AI is pretty interesting, and we can kind of fold that into what I see is going on in the larger market, which is I posted in my newsletter a pretty interesting article from that on Business Insider that Steve Cohen talked a lot in. And for those that don't know, Steve Cohen, probably one of the most successful investors uh, that's ever lived. The show Billions is based on him. His hedge fund actually had to close down because they got convicted as some, or not officially convicted. They settled for some pretty serious charges against them. But I think the way that people I know kind of talk about that is like they were doing the same types of things as other funds. He was just really good at it and drew way too much attention. But I'm not here to comment on the legal situation. No matter what information he obtained, he seemed to do more with it than anyone and really know how to play people well. And if you want to learn how the institutional markets work, Billions actually does a really good job of saying that. But anyway, one of the things he was talking about was something that we actually tweeted on earlier in the day before the article. That's why I was quite fond of the fact that we talked about the same thing before this article was printed, which is basically this AI value increase is a real thing. And it's a real thing because the technology is getting more real. So obviously, anyone that is in a position to leverage it, everyone from the obvious, Microsoft, which kind of got it first because OpenAI is kind of like the first mover to make this realistic. And that's really carried over to Google, which we've talked about on here. They kind of have the best AI brain. But what's very important about that is there's really two components to good AI tech. There's the brain, which is obviously incredibly important, and DeepMind is something that they acquired a long time ago. That is really, I talked about Mu0 here, and that's one of the main technologies that they have. That's very important. That's really built off this brain, but there's a lot of other things that they use it for. But they're, kind of A plus in that. But what a lot of people don't realize when they talk about when you're talking about essentially AI tech is the data set is just as valuable as anything. And one of the ways Google's AI is able to work so well is they have everybody's emails. In addition to Google search, they have a huge data set understanding how people work. But where OpenAI actually has a leg up on them is a concept, especially as we know today, that's really advanced, called reinforcement learning. And reinforcement learning is when models can figure out what they do well and what they don't do well in kind of like a live test. And a really good example of reinforcement learning is obviously Google search, where they know if you click the first result. they know how to tune their algorithms because the goal is to get you to click as soon as possible and not have you go down the page. So that's a good example of their reinforcement learning, their reinforcement learning data set. But what that doesn't apply to is something like, these large language models, which ChatGPT has a huge leg up on in terms of how people interact with them. And that's their first mover advantage. And that's why they got priced so well. And here's the thing, it's nothing that Google can't catch up to, especially if their brain is better and they build a similar data set. But that is kind of one of the things that I talked about in my newsletter, whereas these AI companies are or companies that employ AI heavily are getting real bumps in their valuation because you have to, for real, value their businesses more. But part of that is a little dark because part of the reason you're going to value their businesses more is because they're going to be able to cut headcount. This technology will replace jobs. And not only will it replace jobs at Google, part of their revenue growth is technology is going to replace jobs at other places when wielded with like a powerful thing like Google Cloud or AWS, or even Facebook being able to use their own unique data set to serve ads better to people, because I would say their ad platform is really something that can reach people in kind of a unique way versus search. But what I was talking about there is actually very important, where the reason that Prospero has been recommending Meta and Amazon a lot, and they are kind of like delayed beneficiaries of this, but we kind of saw it coming, is you look at something like Amazon, right? They're leveraging AI heavily. AWS is even bigger than Google Cloud. They're the cloud leader, and they're the type of thing that increasingly with automated solutions are going to be able to serve kind of consulting or job replacement forms just in the same way that Google can. But why I like Amazon, why I like Meta better than say Google or even Microsoft, is they are existential threats to each other right now. And I think the way most people are looking at it is they're looking at Google as someone that's going to win. And I don't think that's a bad bet, but I don't see the same risks baked into Amazon or Meta's future business, where it's like AI is going to help them and they have great data sets. They'll be able to, cut headcount, offer new products, target better, all the same things that anyone that's using AI is going to be able to do, but they don't have, I would say, the same kind of ChatGPT threat or any sort of AI new player. Like Amazon's moat is so big in terms of like, and what I would call their moat is not only what I've talked about in my newsletters, which is like they do process better than anyone else, where it's just like when you look at, say, Google, that the founders built a world-class algorithm that was just the best, and that's their moat. But as you can see, something like ChatGPT can really, at least threaten that a little bit because new technologies get built all the time. But if you look at Amazon, what they have is a process. When they start new businesses, they do it well, they do their research, they have a whole approach to how they've expanded in all these little areas and how they've built their company, and they're just very good with their process. So when Bezos leaves or left, that process remains. But in terms of Google, they've fumbled around a lot more, and it's just like a really, really good example in a story that a lot of people don't know is, obviously Amazon got into cloud first, and they were the early mover and they did that. But Google actually was a way more logical entrant into that business. And they got in after because they had better technology and they could have offered it to people. I actually am on Google Cloud. And the reason I'm on Google Cloud is my best technology when I was building AI, 12 years ago when I started. I was using SQL and I moved over to BigQuery as my database, which used to be Dremel. Google built an internal database that would essentially horizontally scale database operations. So instead of like taking a thread and going down one row by one, it distributed it to a lot of different threads wide. So to you, a query just takes really fast, but these were queries that could take us, these joins on financial data sets could take us 12 hours. Dremel, that became BigQuery, did it in seconds. I thought it was an error the first time I used it. But I tell that story to give the perfect example of Google just not running as well as Amazon does. Because Amazon saw an opportunity. They didn't even have the same technology as Google to really leverage it. And it took Google way too long where Amazon got in there to realize that they could actually do that. And I think that's the perfect example difference about how they're run. And Amazon will be run that way long after Bezos. And not only that, you can just see they're starting to touch medicine. I think they're going to start to be a shipping company. I mean, they already are, but I think at some point they're going to threaten FedEx, UPS, maybe even make a deal with the US to replace the USPS. I think that might be what's happening with their drone technology, to be honest, because the big thing about the USPS is that it's delivering to all these remote places. And how do you get mail to those people, even if people hate mail? So yeah, I think that is just a big difference that I look at in terms of like leadership and process and Meta, which we really also like. It's probably the stock that we like the most because I think it got hit way too hard over an understandably stupid decision by Zuckerberg. But I think our signals, and this is the remarkable thing about our signals picked up this mispricing like before I myself even realized this. And I've written about this, but since February 16th, Meta has been looked at 100, the top of our upside breakout scale, basically meaning there's way higher demand for call options in the long-term options markets than puts. And what's kind of remarkable about that is I went back and I looked, and it's normally a struggle for a company to hold that for a week solid, or even within the day, people are going to be going up and down in different metrics. And if anyone follows our metrics, it's different. So they've had a stranglehold on that. And since it's been at 100, the stock has been up 42%. And I think that's just a really good example of how the Prospero signals work, but also a representation of why we built Prospero. Because I was still sitting there telling myself that Zuckerberg doesn't know how to run a company. I didn't care about the value prop. I didn't care that it had high profitability and still high growth. I didn't care about any of that because I basically thought Zuckerberg was ill-equipped to run a company. But, while I still have some of those concerns, and obviously I'm way more bullish on the management of Amazon. If you listen to Buffett tells you management first. But Facebook is kind of run by a board, which is not always great, but it prevents them from making huge mistakes. And I would think actually being a little more, I would say Google is not even like strong enough and a strong enough board sometimes to make the right decision. So it can be nice to have a strong board to force you to run a company more efficiently. But what I would basically say is that he completely reversed. He went from like a stupid business idea in the metaverse to shifting into AI. And that might be obvious, but the thing is, I also commend him. And I commend him. It's very hard. And like, this is something that maybe you can only do if you're Mark Zuckerberg and you just have always had it. And he does. He's a very smart guy. I don't think he's a good CEO, but few can question his intelligence and his understanding of people. But he doesn't care. He was like, you know what, this was a mistake. I'm shifting into AI. And quite frankly, I don't like them as much as Amazon because, as I said, Amazon is so process oriented and just buttoned up, and they know how to enter new markets and they can see things before they happen consistently. But we really like Meta. Our signals like Meta, maybe even more than Amazon. So maybe some of my personal feelings are coming through. I'm still recommending them both above all for the last 2 months, I'd say, and that's been working out pretty well. But I would also say that they are in very good, they're in as good position as anyone to leverage generative AI, because what we were talking about open AI's, kind of conversational thing and building that data set, it's a lot easier for them to embed conversation. And there's a lot of people that still have no idea about ChatGPT. I know that's shocking, but especially as you get international, where they have a huge market, if they start integrating that into just how people interact with Facebook, have like a smarter graph search, they could catch up faster than Google to Microsoft if they execute well, just because they already are interacting with people. And like Google might have emails, but you're not interacting with them. And they might have the autocorrect or whatever, but we're used to interacting with Facebook. So that is something that's why, and I said this in my most recent newsletter, that's why I'm most bullish on Amazon and Meta. I was already there, but that was already kind of wrapped around this AI idea. Whereas it's just like, I would say Google's the odds-on favorite to beat Microsoft in my mind because of the brain that they have. But I wouldn't feel that comfortable making big bets on either of them. And I think plenty of people are betting on Microsoft as the underdog. And it's very interesting because if you look at our signals, like Amazon and Meta look better. Google is right behind them in terms of how it looks upside breakout relative to long downside breakout. The short-term signals like it better than Microsoft. But Microsoft, even though it has similar profitability and growth, which is very high to kind of those other ones, if anything, Amazon's a little lower than the other three. Google, Meta, and Microsoft are definitely higher than Amazon in their profitability plus growth. But I think people are basically paying a premium for what I'm talking about, that that better management. And I've got no problem saying that. And I've got no problem saying, despite the lower profitability and growth prospects in Prospero, I don't aim Amazon over any of these stocks. But Meta is probably my second right now, and that's why we keep recommending it. Nonetheless, I would say that, Microsoft is kind of that, you see it. It's got like a 28 upside breakout and a 34 downside breakout, which means no one's really betting big on the options markets either way. But it still has a 93 institutional flow, which to me means that it's a long hold, long option. They're just like, hey, I want to own this stock in case it's Microsoft, but I'm not willing to bet on it in higher leverage trades like options quite yet. So that's how I think the market is looking at it. And yeah, I just like Microsoft, while I think it was an incredibly savvy investment to pick up OpenAI, they just don't seem to know how to do anything that really gets them ahead. Like they had Windows, it was a stranglehold, and I just feel like they keep losing a little bit, but it's such a good business product. Like I use a PC because I use Excel a lot, and I will get mad at a Mac if I try to use it with my hotkeys. And I think there's like a lot of people like, or my shortcuts for people that don't know what that is in Excel, because they're totally different on a Mac. But I think they could be doing so much more. And with that, with the other thing, so I think that's why there's not major bets, because like right now they're definitively ahead. But people, by the way the stock market is reacting, especially with Google getting into Bard, the stock market is reacting like Google is gonna beat them. Google's gonna get ahead, especially when you look at the options markets. But like I'm saying, it's still too big of a threat, because if they take a big step forward, if they start to take market share in search, which I don't think is a high probability, but it's way bigger than someone like threatening Amazon's core business in my mind, or to a lesser extent, Meta's core business. So that's why I kind of view it as the bigger risk of those three. But yeah, to kind of circle back to what I was talking about, I took a long AI hiatus because everybody wants to, everybody is interested in it right now. But I would say that I really like, for someone that wants what I called kind of in the newsletter, great AI exposure with a great company that doesn't have to like win AI. Amazon and Meta could easily have the 6th, 7th, 8th, 10th best AI tech in the US and in the corporate US, and still have amazing businesses. Like if Google doesn't win, they are going to lose market share to whoever, like whether it's Microsoft or whether, if Facebook figures out how to use search, or even Amazon, they figure out how to like get you to their products first and they win on search, which I wouldn't put past them. You go to Amazon and you do your Google search and it'll take you to another site if you need, but maybe just to Amazon products first. I could see that happen. But yeah, that's kind of how I think about it. But back to like Steve Cohen. and what I'm seeing in the markets, because yeah, we both seem to agree that this is a legit value pump. And especially if you look at kind of what I posted about QQQ net option sentiment being like diverging a lot higher than SPY, especially with this debt ceiling, I'm starting to talk more about like that it does look like some of that might be hedging behavior against the debt ceiling, which is especially why you see those heavier put options being bought and that lower net option sentiment, where they're hedging the whole market with the debt ceiling, but still want to bet, make bull bets on the QQQ. And that's the behavior that I do think we're seeing. And yeah, like something that I've talked about increasingly in my newsletters that, Steve Cohen came out and said, I'm bullish. He came out and said that. He came out and said that, basically this AI is carrying things up. A lot of the things that I've been saying, he's basically been saying that, he also thinks that, kind of gross margin is going to go in a direction that helps like create lower rates sooner. That's one side. And that's the bull case. And I always kind of say this, you've got to take anyone in finance with a grain of salt. And Steve Cohen could very easily be pumping the market up and saying that because he wants to short it later. You never know. But I do also think there's something to be said. He might own a lot of these AI stock names. Sometimes it's just obvious. He wants to share his thesis because he thinks people should be buying AI names. And I don't necessarily think that's the worst idea. Here's the other side and what we talked about a little bit last week, but kind of we'll dive deeper. Like consumer debt is going through the roof. I kind of pulled up a picture in the Substack. And the thing about that going so far up and the looming recession, and I talked about both how JPM last week kind of talked about how they're feeling more certain about a recession. Goldman Sachs said that, which by the way, Steve Cohen said, yes, there's going to be a recession, but I don't think that's going to hurt the stock market, basically. So there is that. But, they're becoming more bearish, especially on rate cuts this year and the probability of that happening, which obviously, regardless of this AI thing, is going to send the market down. If people are overestimating the rate cuts, there's no more surefire way to have that happen. And, the thing about consumer finance and those that don't know this about me, I actually worked at Bear Stearns in the summer of 2006 in mortgage finance. So I was in that mess, literally. And the only reason I'm proud to say that is because I was a sophomore in college when I had that job, and they offered me a job back, and I actually turned them down I don't want to say I really knew everything that was going on. What I did know was that we were buying roughly $500 million to $1 billion in mortgages every week, and we lose out on maybe 5 or 10 billion more. I was in the meetings and I heard this, and I was essentially like, I don't know what's going on there, but I've taken some intro macroeconomics, and this seems like way too big a percentage of the economy that is just churning into the loan market. Like, there's got to be something to that. That is all to say, I know firsthand what consumer finance and difficulties in that market can do. And it going to all-time highs on personal debt is obviously not something that is going to have zero impact on the market. But let's talk about like what the down case is. Like it's mostly everyday people with consumer finance, right? That does, however, affect, them, defaulting, them potentially losing houses. What that does spiral into, though, is things like, everything from, I would say first, defaulting on unsecured debt. So anyone that, credit card companies or anyone with like a lot of exposure to that, it's going to hurt. It's going to hurt that, companies that securitize a lot, obviously they don't, a lot of times investment banks are owning the risk on those personal finance things. And just a real quick lesson on securitization. All that it means is those credit card companies are basically selling the debt to other people. So they're not necessarily as exposed and the risk is being spread out around a lot of people. That's all that securitization means. And And it's even crazy. People like securitize like cell phone receivables now and like airline parts. It's gotten crazy. I mean, it was always crazy. But anyway, yes, it hurts everyday people. But the other things you have to watch out for is obviously real estate. Because if people actually default on their uh car loans last. Like that's the one thing, people keep paying their cars, they won't pay their house before they pay their cars. um and so that's kind of the last thing. So there's a little concern there. There's a bigger concern with these mortgages and companies with a lot of mortgage exposure, and even some of these like upstart credit companies. I think that's literally what one of them is called. um, but there's exposure there. But then you start to have all like the real estate, the builders, the REITs, sometimes even commercial real estate, all of that stuff is going to be felt by this. That all being said, like even with lower consumer spending, and we talked about this in a newsletter maybe a month ago, even with all that consumer spending decrease, and if people lose jobs and everything like that, that won't necessarily hurt the market that much. Like obviously, if there's more bank failures, obviously if mortgages really get hurt, if the real estate industry like really gets hurt, like the bank failures I would think are number one. But the other side to especially bank failures is we saw basically how when shit really hit the fan, that actually like lowered people's like interest rate predictions. So there's a little bit of that to this. That all being said, there is a scenario where the real estate markets are hurt, finance companies are hurt, maybe retail companies are hurt a little bit, but the extent that that's priced in already and people have like cut jobs to associate with that, and like we say, cost cutting, could mitigate that. So yeah, there is essentially a circumstance that we could see where we definitely see the impact on the economy, but not as much in the stock market. And that's as we've been talking about. But some of these things are also just like, it's very hard to odds make them. And that's why I say people should look at our signals, read the newsletter. Like the one thing that's really unique about what we're doing is like we have these unique options metrics that can get people informed on where these things are going. Like there was a really cool bank failure thing that we shared where a week before, all of the four largest halts following Silicon Valley Bank, all of them spiked in downside breakout the exact same way a week before it happened. So yeah, like we can kind of help with that kind of thing, which is why it's very important to look through the app and read the newsletters always, because we can get people ahead of these kinds of things. But yeah, in my mind, the scenarios could range from the one that Steve Cohen's pitching to like AI carrying the market up, cost cutting, we hit our bottom, maybe the like some real difficulties in the economy, like before rate cuts happen, cut into that a little bit, but it's a general, like not a big bull market, but a bull market, all the way down to the complete other side where there's bank failures and not inflation reduction. So people are just like, the Powell's not giving them that security that they're going to get rate cuts. Spending is down, REITs are giving terrible fund guidance, and people are taking haircuts on these loans, and all of that goes in the complete other direction. And that's always the unknown about the stock market. It's very important, where like you could have all of that happening and then there's a bunch of panic selling. They're selling by retail, institutions say, I want to buy back lower, this is too much risk. We could have that, and then the market could go way down again, even further than before. Or there could be a general attitude of, we've seen the worst, maybe the rate cuts aren't here, maybe it gets hit a little, but the companies were prepared to weather the storm. And I love these AI companies and I want to keep investing them, because even if people are losing jobs, these jobs are going to go right into these AI companies. So yeah, and that's one more thing that I just wanted to tie the knot on, one more while we're talking about this. like the really thing that I think maybe some people don't realize about some of these jobs is how much these big cloud entities are building out. It's not just chat GPT, are building out their services and their AI and the way like their automated decision making and all these products. And so I think that's what some people don't realize with like this AI. It's just not all just generative AI and chat GPT, like literally helping people do their jobs faster. It's also more and more functions. The more capital that goes into these operations, the better their tech is, the more people will, be, I would say, even open-minded. And that's a big change to AI being integrated into their business. That gives these cloud providers and the sales teams associated with them kind of a bigger mandate and a bigger footprint to go out and chase business.
All right, so there was a lot said there, but I have a few questions that I wrote down along the way. So, how about you were talking about a lot of the companies that are directly involved with AI, and they're already big cap tech companies, and they're going to do amazing things, and AI is great for their businesses. But as AI technology progresses, do you think that the AI being used for companies that are just using the technology will increase their margins and give them a multiple expansion, just like how the AI companies themselves are experiencing in the future down the road?
Yeah, I mean, I think that's exactly what the Cohen article said, and I agree that it's just like jobs are going to get cut. That's something that we have not been preparing for. And it's just like, I would say the especially difficult thing is other countries have universal health care and we don't. And like, that's a big, big problem because it's not just like if these jobs like get taken, and we don't have solutions, there might be just like a bunch of people that just like don't even have health care and like have no solutions to that. Um, but that's coming. There's no way that that's not coming. Like right now, there's a big transition, and this is what a lot of people don't know about AI. And this is something that I know from building a lot of models. Is like the first step if you want to build a good model is you need to understand the problem, and you need to hold the hand of the AI system or whatever. So like all of these chat GPT hires are just intermediaries. Like one of the things that OpenAI is hiring a bunch of people to do is replace entry-level coders. And right now they have a bunch of coders coding that, but that's kind of the best way to look at it, where it's like there's some legwork to be done, but like once OpenAI or ChatGPT or whatever understands these job functions by dealing with the ChatGPT intermediaries, eventually they'll be better. ChatGPT will be better than the intermediaries because it is learning about what all the intermediaries are doing. And if it's helping, 500 marketing, like high-level marketing professionals today, it's learning how to do their job, all of them together. It's amalgamating their skills. So of course, at some point, it learning that, and it's the reinforcement learning that we're talking about, it is going to learn how to do that better. The question is how it's going to be handled by these organizations, how it's going to be handled by our government. And we are just not getting out ahead of that at all. And it's probably going to be a disaster, much like any other problem that pops up in our country.
Well, isn't it like a great problem to have? Because it's like you're saying like these businesses are going to operate at the highest level possible, but it's the cost of the people not having a job. But like, so what does the economy become? What kind of
It's
jobs
not
is it
a
going to
great
be?
problem to have. It's not a great problem to have after Citizens United was passed and basically like, it legalized, it very like blessed corporate corruption where they don't even really have to like say where they're giving it and they can give unlimited funds to these like PACs and everything like that. Like it's not good if you have that problem. And I've shown this graph, like the wealth concentration for the top 1%, like is just happening more and more. Like technology is great, progress is great. People making their ideas are great. But if those corporations and people are using that money to rig the system more to get more money, that is not great because there's been a huge wealth extraction from like the 1% from the bottom 99%. And that's why we have a lot of difficulties and a lot of infighting and everything. And as I've said before, the one thing both political parties are very good at, it's making sure that the rich get richer. So there's not inherently any problem with more efficiency and companies gaining and kind of like um I would say everybody's jobs and lives getting easier. But the miracle of AI, what it is supposed to do, like to help people, is free up, say, someone working at McDonald's to not have to take orders anymore. So they could do something that, like, more artistic or creative. That's what's supposed to, that's like, that would be the ideal implementation. But nobody wants to do it that way. Everybody's just kind of doing it like haphazardly, and everybody's like, oh, well, I don't have to work anymore, basically, and I can get paid for it. And that's what's happening now. And that will be disastrous unless we figure out some kind of mechanism to stop having people that gain wealth, whether it's corporations or people or whatever, continuing to make it so it's easier for them to concentrate that wealth further and further and gain more and more power, because that's the problem. It's not progress.
So, although AI has been, like you talked about how you've been doing it for like a decade now, it really came into the public spotlight. I think it was November when ChatGPT launched. Maybe it was just before that, but the end of last year. So, what's the timeline from ChatGPT to all we're talking about, where jobs are replaced like at a massive scale, and this is really something that's happening?
Well, it's hard to weigh a couple things here. Like there's the progress and greed capacity where anyone can make money. And people like that because, like what we're saying, the people that stand to benefit the most have the most lobbying power, and that's pretty much what runs this country. Um, but like, look at something like what makes this question hard, and I'm not trying to dodge it. I will give some good meat here. Like, look at self-driving cars, right? That is there. Like, I would get in a self-driving car. It's not perfect. Like, but nor is my driving or other people's driving. Like, if I could get in and say everybody gets in self-driving cars today, and like maybe there's some accidents, I would be like, probably less accidents than there are now. So let's do it. It doesn't make me, but like my mom, for example, is like, nope, I'll never get in a self-driving car. Like, she's just like, oh, look at, like, she points to like these isolated robot mistakes that are just like, well, see, not going to do it. They're not perfect. And it's just like, well,
Look
humans
at all the
aren't.
human mistakes every day. Yeah, how many
Yeah,
human accidents are there?
exactly. But that's the point where it's just like, hey, it should happen now. Like logically, it should happen now. There is nothing stopping the technology. There's some great tests, but like that's even something like I don't even know. I don't know how to make that. Because like I think it should happen tomorrow. Like, but people are gonna like we can't even do anything with guns when, like, I don't know, it's like what, like 80-90% of the people want stricter gun laws, and we can't even do that. Like, how are people going to react to you telling them they can't drive anymore? Like, what's the hope of that? And it's just like that's but where it differs a little is like nobody could stop Google from like starting to fire their workforce, you know but what's going to be done? Like, what's going to be done with those people? Because new jobs are not going to be created like as AI advances. And I do think there needs to be a universal basic income solution. There needs to be a universal healthcare solution. One of the things that Prospero really seeks to do is create a structural improvement. One of like we have a lot of long-term goals, but one of them is to basically become like a people's hedge fund where people can put their money and grow their wealth, and they can grow it in a reliable way instead of what happens now, which is basically getting duped by financial institutions. Like, if we're actually able to grow people's wealth, and do it in a way that we can actually like become charitable, which is one of our like long-term goals, like we could help support that. And that is one of my goals, because I see that coming through the pipe, and I see, unless there being private solutions to that problem, there are not going to be any solutions. I do not expect the government to do anything about it. Like, that is where private solutions have to come in, and that's pretty much why Prospero exists.
All right, so to wrap up this AI discussion, which was great, I think, there's one stock we didn't really cover, which has earnings this week, Nvidia, which is the king of AI right now. Everybody loves Nvidia, and it's been shown in the stock as it's rallied, I think, over 100% since the end of last year. So do you think NVIDIA is pricing perfection with AI right now?
Yeah, and I mean a lot something that like a lot of people don't know in this like craze is that there's always been like for a bit there's been like, oh, GPUs are going to be the thing like for AI. And they have been. And the very interesting thing about GPUs that a lot of people don't know is I mean, they were made to run video games. And like, actually, like, it's one of those really funny accidents where the video games were so complex that they were basically running a lot of like the matrix math that neural nets needed. So they were just like right there, ready to go. There needed to be some low-level programming to change. However, um, there's been a movement to some even like coding languages um, to do more processor and RAM based and distributed calculations. So AMD, those kind of things. NVIDIA isn't the slam dunk that I think it once was. And you can see that when you look in Prospero, it doesn't have very high upside breakout or downside breakout, meaning nobody's really betting one way or the other at these prices in the long-term options markets, even though it does have high profitability and growth. So yeah, it is very interesting, but I don't think it's quite the moat that it thinks it has. I do think there's a very interesting that they're doing a very interesting they have called levels, which is basically their own language to use very intense, like top of the line GPUs to do even things that you might do on a processor or RAM. They basically like write the code that sends all of your calculations, not just the complex neural nets, to a GPU, which could work out very well for them. But those GPUs are still really expensive. So we'll see. Actually, Prospero is in like an inception program, and they're always bothering me to check out levels. And I do want to, but it's just one of those things that I haven't had the time to get to or really evaluate yet. But that is the counterpoint. But I do agree with you that like even a small beat probably isn't going to move them that much at this point. A big beat might, some great guidance might, people are excited. But any disappointment, uh, and it could just tank a lot of this progress.
It seems as though it's almost inevitable that we will get into an AI bubble eventually, correct? Because just the sheer level of excitement that people have can't possibly um, happen as quickly as people expect it to, correct? Like it's almost impossible not to get into a bubble just because of the level of excitement.
That's why I recommend Meta and Amazon. Like, I think things being propped up purely for AI like are much more likely to have a bubble where it's just like, oh, AI this is associated with AI, blah blah, Whereas like I just named two risks. A lot of people don't know about that AMD risk and like that potentially being a huge shift. A lot of people don't necessarily break down the problem the way I did for like Microsoft versus Google versus Amazon and but like that's why I like those, because I think those businesses are will benefit greatly from AI and actually could surprise. Like that's the thing. Nobody is pricing in that Amazon has the best AI or Meta has the best AI. And like Meta could have the best large learning model. And then it's just like to the roof. But I do think its core business is being undervalued, especially because reels are getting better. And who knows how long TikTok is allowed to be here, or if like I could even see people like I could even see the US like torpedoing TikTok in its own little ways.
I think I
Like,
saw it just got fully banned in Montana, I think is the first state that's happened.
yeah, I'm talking about more nefarious ways where like you just like you can't find it in the app store, or it just like breaks because it doesn't get connection or something like that. Like we could do that no problem. Like our like,
Hmm.
the CIA could be like, oh, let's just make TikTok suck for the next month or two. Like maybe they've already done that. Who knows? That's hard to speculate on. What I do know is reels are getting better. And there might be, you know, China wants to take Taiwan. they're getting closer and closer. I think they're using a lot of like there's a lot of rhetoric around, well, Ukraine and what we're doing with Russia, and we don't know, and I could easily see chain reaction, like China takes Taiwan, meta stock soars, like I could see that happening the same day, like very easily. Even with the rest of the market, like tanking, I could see meta just like going through the roof the day that happens.
That China-Taiwan situation is a whole can of worms that Elon Musk did an interview on CNBC last week, and he essentially confirmed that it's written in China's, I don't know, whatever government process that it will happen. And he said, you don't need to read between the lines, like it's going to happen. So if that, well, it sounds like it will happen eventually, no matter when, but are US companies going to be forced to pull out of China? How is that going to, or I guess you don't really know, but what is your opinion?
I think we'll make nice. We can't afford, like, our economies are too intertwined, and globalization, it's just a lot of it is political theater. Like there'll be some like that's what I'm saying. Like I feel like we might not escalate it any further. We'll like be like, we're angry about this and move some ships around Taiwan, and then ban TikTok. Like I could see that being like the full result of what happens. Like, because we've got ourselves into a real situation here, like as the US, where like this is a whole other conversation, but just very quickly,
Hmm.
like China has surpassed us in many military ways, and they already had the manpower thing. But basically, like if you look at like there's a great story that I think I've told here before, where Google canceled a government contract, a government contract we knew very little about, but that it knew AI, because they didn't like what they were being asked, basically. And Palantir picked it up the next day. This was a little while ago, but that's the U.S. and Google. We're just like, please, can we have some of your best AI, Google? Whereas China, it's got the best people in industry, working on that AI technology, making whatever killer robots they want or whatever. And that's no fault against Google. I'm not like, hey, Google should be building killer robots, but it's just an example of like how structurally they're built to like do better with this military stuff. And then the US just does completely ridiculous things, like building F-35s when the military is like, we don't want F-35s. Like they have a general get up and do that and be like, we don't want these, we don't need these, nobody uses them anymore. And Congress is like, we don't care, we're building them because Lockheed Martin or whoever is paying them, or Raytheon, who's literally like it has been in the cabinet. So yeah, that's how it works. And it's like, yeah, if we do outspend them, but we're outspending them very like stupidly. And there's like the classic US example of like how we think. Whereas like in terms of offensive programming, like China's won military programming. Like China's won, Russia and us are like 2 and 3. But in terms of defensive, we're down the list, and China has also won. So they're obviously in our systems all the time. Like we're not the best on defense. So like to bring the full loop on the comedy of the F-35 thing, is it's just like those F-35s aren't even very useful if China can steal them because they're hacking into our systems on the way into their airspace, and all of those things are automated right now. So yeah, we don't have a very good or cohesive military strategy. So like it's all bluster. Like, and I think that's why they're going to take, if they actually thought, like if they thought that like we had a more powerful military than them, they'd never take it. They know we can't do anything, and we owe them a bunch of money too. It's all posturing. They're looking for their opportunity. They're probably looking for the next horrible thing that we do. Like I think they sent those balloons over us to just collect grievances. Like I think they wanted us to shoot those balloons down. And so when they do take Taiwan and we are like, oh, we don't like this, they'll be like, oh, well, you shot down our balloons and you're, fighting Russia. And yeah, so I mean, I think that's all they're doing, and it's inevitable. But it is a major problem because I do think they do care about perception, and they don't want the world mad at them, and that's what it's more about. But they're not afraid of us anymore, and that's not good for us.
Your volume cut out in my ears. I don't know if can you hear me right now?
I can hear you. Can you hear me
Okay, I can
now?
hear you now. Yeah. It was just
Yeah.
the last like couple words you said.
Oh, I was basically saying that, yeah, China's not afraid of us anymore. And that's not a good thing. And we should be very afraid of them. Because they can certainly do whatever they want, but they do care about what the rest of the world thinks of them. They couldn't handle a world war against them, and they're very kind of prudent. Um, so yeah, like also while they're on the same side as Russia, like they don't really like Russia's very close to them and it's tenuous. And they certainly like if they were to piss off like Russia, Japan, us, and India, that wouldn't go well for them. But at the same time, none of those places are getting too pissed off that they take Taiwan.
Hmm.
Like I think they're gonna let that happen. But yeah, it's not a great situation for us.
All right, before I pivot, I see we have a comment from Philip Lexman who's just saying how much he loves the Prospero app and how he used it to buy some stocks recently. So thank you, Philip, for commenting. We love comments, and if you guys have any questions, just feel free to comment. We'll try to address them in the future. And but next, the market has ripped, and I feel like it's been in the face of investors almost recently. And if people want to look for value in a market that's already ripped, I have a few stocks I wrote down that are actually either at 52-week lows or very close to the low. And I wanted to get your thoughts on them. So if we want to start with ChargePoint and how you feel about that.
Yeah, ChargePoint is actually very interesting because it's got an 81 growth in our system. And while the upside breakout is not that high, it's 58, it has a good upside to downside breakout ratio, which basically means in the long-term options markets, even though it's low, people are more bullish than bearish on it. And it's got a good net option sentiment at 82. So that could be a good growth buy. Like that one is the one that like over the next like 6 months, 1 year, even if it gets hammered a little bit, could be a really good one.
I think something that's hurting them is they went public through a SPAC, and that's just like a bad word essentially in investors' minds nowadays.
A lot of people lost money on SPACs. So I think
Hmm.
that that might be, but I think we've talked about this before. It is great to find value that way. Like there's big opportunities to do that. Um, when you like see when you're just like, oh, I see why it might be undervalued. That is actually a great way to be like, oh, this could be a good buy.
All right, another one, Enphase.
Enphase is actually very near and dear to our hearts because I wrote my first like research report on that, and I'm way overdue for another one, but it's just been too busy. But yeah, we did very well. We actually called out that it was going to beat earnings, and there's a really cool history from that report about how we basically knew that and how we odds made the markets and our history with the signals. But right now, part of that was it's done very well when it had a high upside breakout and low downside breakout, and that's not how it is right now. They're both pretty low. At least there's not difference, but they're both in like the mid 30s, I believe. Um, but it's got high profitability and growth, 69 and 70, 69 profitability and 70 growth. So to me, that tells me that, maybe as it gets closer to its next earnings, the options markets will like it again, but they don't necessarily see a catalyst in the short term to do that. And First Solar is going way, when I first looked at these two companies, First Solar was way below Enphase, and they've kind of flipped because, I think basically for solar, even though Enphase like was the inventor of the micro inverters, which is the big technology that they use, I think First Solar has started to run like a better business. And obviously the options markets like it a lot more. They like the value. It also has high profitability and growth. So I think it might be some of that people just like First Solar better than Enphase. So that's where, obviously they're close competitors. If they're going to make their bets, they're betting on First Solar right now.
All right, and I had a few others, but it seemed like before they weren't really winners, but I'll just mention one of them. How about Tyson Foods?
Oh man, I took a look at that. I didn't think we were going to talk about that. I'm just kidding. It's got very high downside breakout and very low upside breakout. So like, yeah, even though the other peripherals are pretty good, I just do not like overall, like if I see anything with like a downside breakout above like 70, unless I'm like, oh, I really think this is a great short squeeze candidate, I'm pretty much staying away from it. And that low upside breakout in combination, that means nobody's really liking it in the long-term
Hmm.
options markets. So I do not like it. Like, and we're talking about 52-week lows. So that could be a very good reason. It could be going down more, but yeah, I'm not a fan.
But do you like their chicken?
Not really.
Me
No.
neither. Me neither. All right, so it's a no on
No.
Tyson all around the board from Prospero.
Yeah, yeah, no, no, all around. That's what do they always say on Shark Tank? They're like, I don't use the product, so I can't
Hmm.
invest.
Hmm. Solid principles. So this was really like an AI in-depth episode and weekly update. I think it was really, really cool. I learned a lot. I'm sure a lot of people did too.
It plays to my strengths.
Hmm.
Let me see. Well, we're gonna check before we go. We're gonna check in. I don't know if Philip is still here.
Yeah, he commented a little bit ago, but
Yeah.
maybe he's still
Well, we
around.
still have we still have two watchers. We're
Mm.
down from uh we're down from our three. Someday, someday we'll
Hmm.
be here. We'll get up to the thousands.
Double digits first.
um, yeah, we'll give him like another minute before we give up. Um, we do have maybe our other watcher that is stuck around is still here. But whatever. We can probably I'm just gonna check Twitter to see if anyone commented on the stream there. Um, mm, mm, mm. All right, let's call it. We gave Philip his chance.
Maybe next week, Philip. Hopefully you're back.
Yeah, and we successfully executed the stream this week, so I'm very proud of us.
Yeah. Yeah, and there's going to be a lot of shorts that are, I think there's great shorts from it. And yeah, so good
Awesome.
stream.
All right.
All
Thanks.
right, I'll
Have a
talk
good
to you later,
one.
George.